Today's show is sponsored by Factor. Still verifying help desk callers with questions hackers can Google? Every security question is a vulnerability waiting to be exploited. If you're using Okta, Factor Identity Portal transforms your organization's verification process. Authenticate users with real-time MFA factors in seconds, not minutes. Slash call time 60%. Eliminate social engineering attacks and streamline help desk workflows. Check out Factor's Taco AI, the first AI agent for Okta, on their website. Your team gets one powerful dashboard for all user verification needs. Try Factor, factor.io. That's FCTR.io. Free for 60 days.
Cloudcast Media presents from the massive studios in Raleigh, North Carolina. This is the Cloudcast with Aaron Delp and Brian Gracely, bringing you the best of cloud computing from around the world.
Good morning, good evening, wherever you are, and welcome back to the Cloudcast. We are coming to you live from the massive Cloudcast studios here in Raleigh, North Carolina. Hope everybody is doing well. Another weekend perspective, and had an interesting week for us. Wasn't directly tied to us, but we recorded a show about 3 months ago, maybe. Sometimes, Aaron has been doing a good job this year, kind of getting ahead of podcasts and having a big backlog of shows that we record, and he had recorded a bunch of shows, and we recorded a show about 3 months ago, and we released it last week, and it's starting to get more attention than we maybe expected for a normal show. But sometimes that happens. Sometimes you report on the strange and the obscure of cloud and AI, and every once in a while you overlap with the zeitgeist. So that happened. Anyways, hope everybody's doing well. We're going to dive into an interesting topic that's been we've been talking about a number of times on this show. We've talked about it probably for a year plus, but it's starting to kind of come into focus that maybe it's a reality that's going on, but also sort of a problematic thing for a lot of people that potentially are involved with this or swept up in it in ways they didn't necessarily expect when they signed up for it. So we're going to dive into that topic after the break.
Today's show is sponsored by Vasion Print. The problem with print is it's a resource suck. IT teams are spending too much time on troubleshooting and upkeep. The biggest offender? Print servers. So get rid of them. Swap your outdated, resource-intensive infrastructure for Vasion Print, formerly known as Printer Logic, and get serverless, direct IP, secure printing for any device, anywhere. Centralized print management reduces overhead and workload and increases productivity, which is great for your IT team and your bottom line. Increase security, remove scripts and GPOs, and enable self-service user deployments. Secure, seamless, and scalable. That's what you get when you eliminate print servers. See how at vasion.com. Today's show is sponsored by Do It. Cloud spend is just the surface. What really matters is how it drives performance, reliability, and speed to market. Do It Cloud Intelligence aligns every dollar to the intent of the workloads. Do It is trusted by companies like Fiverr, HackerRank, Current, and Superbet. Do It helps teams go beyond dashboards, surfacing hidden inefficiencies, resolving incidents faster, and aligning cloud operations with business priorities. One platform, unified signals, better outcomes across engineering and finance. Visit doit.com, that's DOIT.com, to unlock intent-aware FinOps at scale. Do It Cloud Intelligence.
And we're back. And as I mentioned at the top of the show, top of the hour, we are going to dive into a topic that we've talked about somewhat on the podcast, over the last year plus or so, as AI has crept into the cloudverse, if you will. And it's a topic that we covered a lot back in the cloud days because we were oftentimes talking to startups, to startup founders, to people that were trying to shape this new cloud paradigm. And we've continued to talk to a number of startups, AI startups, as we do on the show, as we often do. It allows us to get insight into what's going on in the industry. But we also talked a bunch about how there haven't necessarily been as many acquisitions as we saw in the past, but we actually are seeing a lot of acquihires in which one of the large companies or a company who has been well-funded and is looking to expand their portfolio, expand their market opportunity, is going after companies that have interesting technology that could add to what they do. And what they're doing is, instead of acquiring the company, I've been having to go through all of the legal hassles, legal proceedings, legal goings on to validate that it's not antitrust or it's whatever it might be. They're just simply acquiring, hiring, sort of picking and choosing people from specific companies. And so, we're seeing a number of situations in which the founder of the company and oftentimes, their chief architect, their data scientists, their AI researchers are all kind of getting picked to go work for one of the larger companies. It could be a Google or a Meta or an OpenAI or AWS or whoever, and it's leaving the rest of the company behind. And this is sort of an interesting phenomenon. I mean, we've talked about acquihires in which the entire company has gone over there, and this oftentimes happens when for whatever reason the company didn't necessarily figure out product market fit. They didn't necessarily figure out how to go to market properly. Maybe they were started by a whole bunch of engineers who thought we just have a great idea, but we don't really know how to deliver this to market, or they don't care about it, or they just couldn't figure that out. But the underlying technology was still very interesting in a technological way. And we've started to see this play out a little bit more here recently, whether it was, the Windsurf debacle that Brandon and I talked about this last week, or ScaleAI, which, Meta actually acquired like 49% of the company, but hired their CEO, and, Inflection, which was a company that owned a whole bunch of GPUs, but wasn't figuring things out. And there's been a whole bunch of these other ones. And I bring it up as an interesting thing, not so much about like sort of the startup dynamics, right? The startup dynamics are always going to be volatile, right? Anytime you go work for a startup, or anytime a startup, tries to do something, even if we were to look at OpenAI, and we don't really think about OpenAI as a startup anymore, but I mean, still, the fundamentals of being a startup in any industry is essentially David and Goliath. It doesn't matter how smart the people are, how world class the people are that acquire the company or that start the company. You are in essence, either going against a giant company in the David and Goliath sense, or you are trying to create a market from scratch. You are trying to create an idea, market an idea, make people aware of it around the world about some idea that they'd never even thought of, 2 years ago, 10 years ago, 5 years ago, whatever it might be. And so you're always up against it. You always have a finite amount of funding. You oftentimes are burning through more cash than you might have expected to, because you are hiring quickly, or you're having to spend a lot more money on salaries because you want to get the best people. You don't have time to, onboard people and train them and do all sorts of things that you might do at a larger company that has, structured programs for doing that. The second dynamic that's going on is, we are obviously, in the early stages, but sort of the chaotic stages of the AI era. And because there are such high expectations, because there are such high projections about what this could do for the market, about who could make money, about where people are going to spend money, about what the outcomes are going to be, whether it's value creation or cost savings or whatever it might be, there are huge expectations. And so while the amount of money that people are raising sound like astronomical numbers, there are no numbers that don't end with a B, don't oftentimes have 10 digits, 12 digits, whatever the number might be. And we think, oh, those are insane amounts of money. When we're also trying to do this against the most expensive form of computing ever invented by mankind, in terms of GPU-based computing and so forth, you're going to burn through that money very quickly. And then, layer on the fact that the number of people that are world-class at this stuff is limited, and you have, craziness like, Meta offering $100 million signing bonuses to people, right? So, you burn through those dollars very, very quickly. The third thing that's going on is, and this is, somewhat of a U.S. thing, but again, most of the big tech that's driving this does tend to have some sort of U.S. connection to it. The U.S. Department of Justice in the United States, Federal Trade Commission, or the DOJ and the FTC, as they're oftentimes known, are, at a level that we haven't seen before in terms of scrutinizing large tech organizations, or even scrutinizing any sort of acquisition at this time, right? They're concerned about monopolistic behaviors. They're worried about market consolidation and that restricting, users' ability to get, the best service at the best price, and all those sort of things that they're there to sort of look for. So, we've got a lot of these big market things at work, and I understand. It's interesting that we're now seeing this now, right? It's interesting that we haven't seen this in the past, in which, people have just sort of gone and cherry picked, certain people from companies. And I think part of that is because we still haven't quite figured out, what exactly AI is going to do. But the expectation is, well, the most valuable people, if you can't figure out what it's going to do, is to continue to have people who can refine models, can make the models better, deal with the types of problems that a lot of times regular people are worried about, which is like, well, will you get the information right? Or will you be able to secure the information, right? The most basic things that we still struggle with in non-AI worlds and just database worlds and deterministic types of scenarios. And so, the thing is, well, don't worry about product market fit. Don't worry about go to market. I have all those sort of things, which is the same dynamics that at least the go to market piece, sales and marketing or brand awareness that, we had in previous generations of acquisitions. But it's interesting that we're seeing these things happen in ways that we really have never seen before. And what I kind of want to dig into today a little bit is, well, what are the second order, kind of ramifications of that? What are the, what are the ripples in the pond that come out of that? And I think the biggest thing that I think is going to be very, very interesting to watch, and I think it has interesting, kind of ramifications is if you are, I'll reframe it. We get people all the time who listen to the show, people who reach out to us all the time. They have been in the tech industry for a while. They do various types of things, and some of them are, quote unquote, non-technical people. So they do, marketing. They do even product managers, even, systems engineers, or people that, aren't necessarily, pure sales or pure marketing, who go, I'm somewhat technical, but I have some other mix of skills that, I'm not necessarily just purely writing code, or I'm not a data scientist, or I'm not a AI researcher, but I do things that ultimately make the computers work, make the computers be well documented, make sure the computers can be upgraded, all those, sort of things that are necessary, or even, figure out how to translate some customers' crazy ideas that they could write in the back of the napkin into, some sort of viable architecture, right? There's all sorts of jobs in our industry that if you try to explain them to, your friends who don't work in the computer industry, they would all be like, that's a job, right? I don't understand. That's a thing. They pay you to do that thing. And yet, those of us who do work in the industry, we sort of go, okay, well, if that didn't exist, then you'd have a certain level of sort of chaos or gray or a big open hole somewhere in kind of the ecosystem, which is, ultimately taking stuff that is very, very complicated, i.e., computers and software, and being able to make these things work and making sure they never crash and making sure they scale very well and doing it in some economical way that isn't ridiculous to use. And then, being able to do all that stuff and then translating that into, just crazy ideas that people have of like, I want all these things to work, and I don't want to have any trade-offs, and I also don't really want to pay for it, but I also want it to work 24 hours a day, and all those sort of, like human expectations of stuff, right? So there are a million jobs that are sort of like the in-between jobs between you are the CEO and founder, you are the crazy person with an idea that you want to go get this company started, and you are the engineer who wrote the software or figured out the mathematics of doing that. And we glorify both of those, and we highlight them, and we write articles and books and movies and stuff about those sort of folks. And they're very, very important because obviously, some of these things wouldn't happen without them. But, the in-between is oftentimes a lot of the folks who listen to the show, and they will reach out and they'll go, hey, I've done very well in my career. I enjoy what I do, but I don't necessarily enjoy the company that I'm at. I'm thinking about, how do I get myself more responsibility? How do I take on something that seems more fun or moves faster than what I do, or just, gets me into that part of the industry because I don't get to do it for what I do. And my worry is all of those jobs, a good majority of those jobs, while every company has them, if you do them at one of these startup companies, there is a uniqueness to what you do, at least for a period of time, while you are tied to that specific company, that specific product, that specific technology, that specific implementation of it, in which you are somewhat valuable, right? You do something unique and you help that process along. And my worry is with this new way of doing acquihires that person, that set of roles no longer has any value. Let me reframe it. There is no advantage to you going and taking that role because number one, you're likely to probably have to take a lesser salary or some sort of lesserness than you had before in your job that was more stable. But the trade-off was always, well, that's okay. A, you're going to gain a bunch of valuable insight and experience that's going to satisfy you in some way. Maybe it's going to help you with your career. Maybe it's just going to, kind of scratch an itch that you want. But the flip side of potentially taking a little bit less money was you were trading it off for equity. You were trading it off for a payday that, you were making a bet, whether you totally understood it or not, that could potentially be larger if your company did get acquired. If, somebody decided that what you were doing was really, really valuable and they were willing to pay a premium for it, and you had stayed there long enough that your equity vested, you were making a bet that you're essentially betting on yourself, betting on the company, betting on the technology, that, the thing that you may have taken less of in the short term, you were going to make up for, bigger in the long term. And, it was and it is somewhat of a casino bet, right? Because the odds of your company succeeding as any startup are 1 in 10 at best, right? Like 1 out of 10 might get acquired. And then, getting acquired at a big premium as opposed to getting acquired at a fire sale rate that, only the investors make back pennies on the dollar. Those are about the same. And, the chance that your company doesn't pan out and it goes bankrupt and nobody makes any money is far higher, right? It's the house, right? It's going to happen more times than others. But it's interesting to see this happen because it does make us question, okay, why would anybody go join an AI startup unless you are the founder or unless you are a set of AI researchers? And in which case, on the AI researcher side, it does feel like right now the market for you is sort of unlimited. Right now, you may not necessarily be good enough to be get the $100 million Mark Zuckerberg signing bonus and, work on the super intelligence team. But it does feel like you are in pretty high demand. Now, the question becomes, how long are you in high demand, right? At some point, people are going to go, well, these models, these base models are all pretty good, right? We don't need tons and tons of deep research on them. They're good enough. We're just going to continue to refine them. But for everybody else, the people who, do those hundreds of jobs in between founder and AI researcher, the market is sort of saying, well, there is no value in you doing that, right? Unless you're going to just treat this job as one in which you get market rate or probably higher than market rate, which you were making before, it probably doesn't make sense to necessarily take this job because the odds are, even if you are doing world-class stuff, even if your company is doing world-class stuff, maybe you are, maybe you aren't, whatever, and your company falls under the radar and the bullseye of somebody else looking to want that technology or want those people, you're not on the list. You're not on the list of people that they want to come over because ultimately, the reality is like if that company acquires you, and Aaron and I have talked about this because him and I have both been through this before, like all those in between jobs overlap the current jobs that exist at the other company, right? They have salespeople, they have marketing people, they have finance people, they have HR people, they have systems architectures, they have systems engineers, they have dev and test people, they have all that kind of stuff. And, while you could augment them, right? Maybe they need an extra 200 or 300 people to do that stuff. Oftentimes what happens is they go, well, please be the people that trains our people about your stuff. And then you become somewhat expendable if you're not willing to sort of go, well, you no longer just sort of work on this one product. You have to work on the whole portfolio. And some people like it, some people don't. But in essence, what they're saying is like, we're just going to skip those 2 steps. We're going to skip the step in which you come on board and you're productive for us, but you also train your replacement essentially. And the second step, which is then we ultimately sort of decide to fire you. And that actually costs us extra money because we have to pay you severance and all that stuff. They just go, we're just going to skip both those steps because they're not valuable to us. And again, that might just be the market dynamics of what's going on, but it feels like all this stuff has happened really quickly. That the changing dynamics of this has happened in the last couple of years. And we'll see how it pans out, but it does sort of feel like there is far less value in joining an AI startup unless you are literally the founder or you are one of the top AI researchers, because the economics of it just kind of don't make any sense. You probably aren't going to have stayed long enough to have a vesting period to even sell your stuff on a secondary market. Maybe you are. Maybe you stay for a couple of years and maybe that's worth your time and maybe that'll pan itself out. But even those secondary markets at these insane valuations doesn't last forever. The market finds some rationalization as the market consolidates, as people figure out what are the winners and losers and so forth. And it does feel like we are starting to see some early examples of, just the dynamics that we were used to for the last 20 plus years have sort of evaporated overnight. And so it'll be interesting. It'll be interesting to watch and see if these behaviors continue, if we start to see some, non super large tech companies. So, not the biggest 5 or 6, cloud providers, AI providers do this. If an Oracle gets involved, if an HP gets involved, if an IBM gets involved or whatever, who traditionally haven't necessarily done, none of them have necessarily done this, but haven't traditionally done this. If those become, I don't want to say better, but different ways of acquiring, or if they start to get involved and their acquiring mechanism is, get the CEO and the top 50 researchers and just jettison the rest, but don't actually hire them, just leave their company as a shell on the side of the road. We'll see if that happens as well. So anyways, just an observation about what feels like a big change in the startup ecosystem, and not so much, the dynamics of the startup ecosystem. They're still taking VC money, but the dynamics of the people who work for those startup ecosystems and the level of risk that they now take on that wasn't necessarily the same level of risk. It was still a level of risk, but it's a different level of risk versus reward than just a couple of years ago. So anyways, it'll be interesting to watch. Hope everybody's doing well. Hope your July is going well. Hope things are going well for you. So anyways, with that, I'll wrap it up. Thank you all for listening. Thanks for telling a friend. Thanks for helping us grow the show. And if you get a chance, give us a feedback, a rating on iTunes or wherever you get your Spotify, wherever you listen to your podcast. So with that, we'll wrap it up. Talk to you next week.
Thank you for listening to The Cloudcast. Please visit thecloudcast.net to find more shows, show notes, videos, and everything social media.